Hi everyone, my name is Vendik and you're welcome back to the channel. Okay, so still on the series, today we'll be treating entry types. Okay, you can call it an entry model. So, okay, let's get to it without wasting much of our time. All right, so I'll just get straight to the analysis. That's why I made most of this drawing so that the video will not be that long. Okay, so that you get it straight. So we talk over entry models. Okay, so based on how I enter trade personally, okay, there's a one I call the risk entry, and there's one I call a justified entry, okay, or confirmed entry. What's the difference between these two? There's an entry that you are sure of the trend, okay, then you just get in at a order block, or um, you get in at the order block, or you get in at a fair value gap. Okay, you just place your order and the market tends to bounce back from there. All right, there's another one that you are not sure of the movement, you are not sure of the trend. Okay, you are sure of the trend but you want to confirm that your trend is right. Okay, so that one I call it a justified entry. Okay, or you can call it a confirmed entry. So those are the two types of entry we are looking at that I personally use, and it works most of the time. So because this really help you on your prediction after knowing the bias, the structure of the market, you know the bias of the day, and then you get this confirmation, okay, or you just get in based on the assurance of the trend. Okay, these are actually how I get into the market, and it gives me perfect entry. Okay, so number one, I call it a risk entry. Because why I call it risk entry? Because you've not yet confirmed that the market is reversing from there. Okay, so you just enter it because you are sure of the order block. Remember what I told you on previous video, that you can't assume in the market. So that assumption makes me to call the risk entry. Okay, so I will explain that in details. But before that, let's just take an example. Okay, I'll use this drawing to explain it. Okay, so you are sure of the trend. Let's assume you are sure of the trend that we are moving down. Okay, you are sure of your trend, and then you have your a previous lower high, and the market is bouncing back to your previous lower high where you are very sure of your reversal. Okay, so you just get in here. Okay, let's say you just get in on the trade here without knowing if the trade is going to reverse from there or not. Maybe just probably keep your stop loss above the trend. Okay, this is a kind of entry I call a very risk entry, because you've not yet confirmed the direction of the market. Okay, you've not confirmed the direction of the market, so that's why this one is a risk entry. Okay, you are just sure of the trend. Okay, and then you get in at your order block, or you get in at your previous liquidity. All right, we've treated liquidity on this series, so you know what that means. Okay, so let's assume, okay, you just get into your nearest liquidity and you are sure of it. You just get into the market and put your stop above the previous high, and then the market just came in and then ride in your favor. Okay, so this is one. Okay, I don't always recommend this pattern, because if you are trading a lower time frame, you may easily get stopped out on this particular confirmation. So it's a very nice entry that if it goes in your favor, you tend to get a higher risk to reward ratio. Okay, so that's it. That's just the advantage of it, but you've not yet confirmed the movement of the market, okay, before getting into it. So the next one I want to is a confirm or justified entry. Okay, is a confirmed or justified entry. Okay, so let's assume that this is the kind of pattern you'll be seeing. Remember what I told you, that trading, okay, is not always what I draw. Okay, and in a real market, it won't always look very clean like this. Okay, there's going to be a whole lot of manipulation, jacking, a whole lot of wicks, okay, that you really need to study by yourself. But this is the pattern you should be looking at. Okay, so let's assume we take this as an example of justified entry. Okay, so we are very sure of our trend, all right, that we are going downward. Okay, we are moving down. Okay, we are very sure of our trend that we are moving down. Okay, so let's assume this is your previous lower high. Okay, and then you are looking at to sell from this particular liquidity here, or fair value gap, order block, whatsoever you want to call it. Okay, let's say you are selling from here. So this is what makes it what do they call it? Uh, okay, a justified entry. This is what makes it a justified entry, that you wait for markets to get to that zone. All right, you allow the markets to get to that zone. You understand? You allow the market to get to that zone. When the market gets to this particular zone, you look at for change of character, because the market has reversed. So this particular movement that break this previous low here means that the market is about to reverse. And then as the market is going back up, all right, maybe a reverse from a fair value gap or an order block. Okay, so these tend to be a justified entry, because you are sure that there is a weakness in the in 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 the movement. Okay, market is showing some sign that is losing momentum, so we are actually going the opposite side of where we are going. The first one was risks, because you were not sure as the market gets to this zone if it's going to break above it, all right, or it will respect your order. But this one, you are sure that market respect this order, and then there is a break of structure, there's a change of character, sorry, there's a change of character here, and then you are having another confirmation, maybe from an order block or fair value gap, that you are going down. Okay, so that becomes your perfect entry. Let's assume you were trading, you were following your trend based on a 4-hour time frame. So for you to look at this justified entry, okay, to be sure of the trend, you need to go like 2 steps down. Okay, if you are using 1 hour, you should be looking at your entry. Okay, you should be looking at this change of character, all right, from a 5 minutes or 15-minute time frame. Okay, so those are the things you really need to put into consideration. So how to do this? You can go and watch a top-down analysis, how top-down analysis is being done on the channel. That will give you more clarity on how to step down on a particular chart you are. Okay, so to get a justified entry, you won't stay. If you are trading at 1 hour, if you're trading 4 hours, if you are trading daily, you need to step down before this entry will reveal himself. If not, it's still one candle you will see, and you might not be very, very sure of the reversal. Okay, so top-down analysis will really help you in this, for you to know the direction of the market at a particular time frame. Okay, so another thing I want to add to this, okay, because I didn't want this video, because the explanation is supposed to take longer. So there's another thing. Okay, this is typical example. So if you wanted to enter a trend, this is the different. Okay, let's assume you were downward, and then you are coming to a bigger order block. Okay, let's say you were on uptrend. Okay, and this is your order block from your higher time frame. Let's assume this is your order block from an higher time frame. This particular big one I'm drawing. Okay, let me bring down the volume a little bit. Okay, I believe you can still see it. Okay, so let's assume this box. All right, let me change it so that to should be very sure, because okay, let me change the color to red and increase it a little. Okay, let's assume this big bar, it was an order block or a fair value gap from your bigger time frame. Okay, so this is what you should be looking at a lower time frame. Okay, if you are trading 4 hours, okay, you step down to a lower time frame. So this is what you'll be looking at. Okay, so when market gets to your order block, let's assume this is okay, this order block here, let's assume this is it on a lower time frame. So market will come inside the order block. All right, normally if you enter from maybe 50% of the order block and then you start to buy, okay, it's risky, because you've not yet confirmed if the market is weak at that zone, if it's going to respect, all right, is if it is going to respect that entry, because you can get into it and you have a whole lot of momentum in the market break through that particular order block, and then instead of him to start still going up, you will now have a change of character, that the market is reversing from that zone. I don't know whether you understand. So this is what will really help you. So I prefer justify entry. You wait for the market to get to your order block, all right? Then you start seeing a change of character, okay? You start seeing a change of character. What's a change of character? This is a change of character. Instead of us to create a higher low, we now start creating a higher high. Okay, so we all understand, because I know I've explained this on market structure very well. Okay, so the trend of the market. So at once you stop having a lower low, okay, and you start having a lower high, it simply means there is a shift in the market. Okay, so there's a momentum shift. So go and look at your market structure video very well so that you understand. So instead of us to have a higher low, we now have a higher high. This simply means there's a weakness, okay, in the market. So if you enter from here, if you enter from this zone, okay, this was supposed to be our risk entry. Okay, let me draw something so that you know. If you enter from here, is a risk entry. So after you confirmed this after you've confirmed this change of character, all right, after you confirm this change of character, if you enter here, it's a justified entry. Okay, if you enter from here, it's a justified entry, and this is another change of character here. Okay, this is another change of character. Sorry about that. This is another change of character. All right, so if as the market is coming back, all right, this is another perfect entry for you to enter. So in this kind of entry, you are very sure that the market is reversing, because there is almost a two change of character confirming that the market is really weak. Okay, so there's going to be a reversal. So this is how to get a justified entry, okay, from a risk entry. So I believe this really explains. I don't know if we should go to the chart and then you should look for example, but let me just look at a live chart, okay, maybe on gold or no whatsoever. Okay, let's say okay, fine, let's take this place as an example. I know the trend is not that much. Okay, um let's say we are going down. Okay, this is the current market structure. Okay, so we have a lower low, a lower high, a lower low, okay, and we are very sure that we are to create another, right, we have to create another lower high from here, because of let's say we are trading off of this particular fair value gap. Okay, so if you just get into the trade like this, if you just place an order here, okay, if you just place an order here, all right, to sell from here to this particular zone, maybe keep your stop above this point, all right, it's a good entry, but this is a risk entry, because you are not sure of the trade that is going to reverse from here. Okay, it's going to reverse from this zone. Okay, you are not really sure, you just get into it, but based on your confirmation and that you are going downward, this was a very nice entry. So this is how to get a justified entry. Okay, so let's say from this block, this is 5 minutes. Let's go to 1 minute. Let's go to 1 minute. Sorry, because I just used that 15 minutes. Okay, let's go to a 1 minute. All right, so this is the 1 minute. The market was doing a higher high, a higher low, a higher high, a higher low, higher high, a higher low. So the next one that's supposed to be an higher high failed to be an higher high. He now create a lower low and failed to create another higher high. Okay, so this particular move alone shows that there is a weakness. Okay, the market will respect there's a weakness on the market, on your zone. That this alone shows that your prediction is right. So the only thing you need to wait for is a change of character. All right, so this change of character will really give you assurance that okay, you were right on your prediction. So you wait for market to break below the previous lower low. Okay, so as the market breaks below the previous lower low, is a confirmation that you are going down. So from there, you can wait for maybe a retest. Okay, this one didn't actually retest because immediately it breaks. It was just a one straight move. Okay, very down. Was immediately it breaks the structure, and immediately you have a change of character, right? Immediately you have a change of character. This was where you rebounce. Okay, so you get here, you failed to do a higher high. It simply means you've confirmed. So this will be your entry confirming that you are down. All right, so this will be your entry and your stop loss will be below the swing high. Okay, so this is what happened. So I remember I told you before that if you enter on risk entry, the only advantage you have is that you have a higher risk to reward ratio. But if you enter based on a justification, okay, entry, you lose some percentage of your risk to reward ratio. So if you measure it with a ruler, you will see that before you get there, it's already 30 pips. So you lost 30 pips and you are sure of the trend. And if you enter off of risk entry, you could have added 30 more pips to your entry. So that's just the difference between the two of them. So this is typical example so that the video will not be very long. So practice this, back test this within yourself and be very, very sure you get confidence on entry. Okay, so if you have done your market structure, you've done liquidity, you've done institutional candle, and then you are currently done with your entry currently, you should be able at least to predict market. Okay, why we be adding more advanced stuff on the series. Okay, so but with these four videos we've made already, you can predict your market based on price action and then be accurate. Okay, so you've gotten your market structure, you've gotten your liquidity, you know what is liquidity, you know what is institutional candle, and now you know how to enter into the market. You know your entry types, your entry models, you know how to enter into the market. So with these four videos, you should be able to predict the movement of the market, place a trade, and it will be in your favor. All right, so start back testing this on previous data. All right, so that the video will not be long. So just back test this with your previous data, like go down to 2014, 2015 on TradingView, back test it, and you will see this thing works every time. Okay, it doesn't matter what you are trading. Okay, so other things will be added to this series. Some things like maybe I'll do a separate change of character and then break of structure on this same series. I will add imbalance, I will add premium and discount range in the market. Okay, so let's just make sure you do the YouTube business. Okay, right, subscribe, share to other persons to see it, and give a like. Okay, just comment. This will really help us to grow and then provide you with more valuable content like this. Okay, see you in the next episode and peace out.